What's up, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades, home of your trading BFF in your stock market bestie. In today's video, we're going to be discussing my top 3 growth stocks to invest in for the year 2021. That's right, we're bringing in the new year a couple months early. It's time to reposition some of our portfolio. And in today's video, I'm going to be showing you 3 growth stocks that I will be investing in for early 2021, and I see huge growth potential throughout the year with these 3 growth stocks. Dividend investing, value stock investing, all that stuff gravy, right? It's all good, but it's kind of boring. You're looking for maybe 5-10% a year. With growth stocks, we're looking for big returns. We're looking for those home run investments. Value stock investing is like investing in your grandma. You can count on your grandma to send you that $15 check on your birthday. However, growth stock investing is like going to a basketball practice for 6-year-olds and trying to pick the next Kobe. Kobe, yeah, your odds aren't going to be the best, right? Most of those kids are going to suck, but there's going to be that one kid who makes it. So that's what we're looking for. We are looking for the next Kobe. And the 3 growth stocks that we're going to be talking about today, I see a long-term investment value in. Kobe investment value, I think they each have 50+% potential. If you're new to the channel, we talk about the hottest stocks in the market every single day, so consider subscribing down below and doing me one huge favor. I ask for one favor every video, and that is to like the button. Just click all the buttons. All right, so let's get into these growth stocks, talk about my top 3 growth stocks to invest in 2021. Let's get it. Before we get started, guys, I just want to plug Webull real quick. Me and Webull have partnered up, so at the end of the video, if you're looking for a new broker, if you use my link in the description after the video is over, sign up with Webull, deposit $100 or more, you get not 1, not 2, but 3 free stocks valued up to $1,600. That's right, on the deposit of just $100 or more. The best broker out there is offering the best deal out there. And you have a chance to win a share of Google, Facebook, or Starbucks. It's the best deal out there right now. Check it out, link in the description after the video's over. All right, guys, so let's break down these 3 growth stocks. We're looking for stocks with at least 50% potential that I believe over the next couple of years are going to offer us huge growth. These are speculative investments. Yes, they carry risk, but with that risk comes greater potential of reward. So let's break them down. Stock number 1 is going to be ticker symbol SPCE, Virgin Galactic Holdings. So if you're unfamiliar with what Virgin Galactic is, they're basically going to be the Disney World of space travel. What do I mean by that? Disney World, you go, you stay in the resort, you can go see Mickey Mouse, you can go ride the roller coasters. Well, with Virgin Galactic, you get to go stay in the resort. They have a big resort, but instead of going to see Mickey Mouse, you're basically going to go to space, and it's a lot more expensive. And I see the growth potential with this company as enormous. I think this is going to be more and more mainstream in the years to come. When you look at the business model from an outside perspective, it can look a little bit futuristic and a little bit out there. But I think if you really take a hard, close look at it, it really is going to start taking off in the years to come. People want to explore space. Even if it's you're riding up to space for 5 minutes and then you head back down, the whole experience is what this is about. So when you go, you buy your ticket to go to space, you're going to go stay in the resort, which they call Spaceport America. And it's basically just Disney World in the desert. And that's where you're going to stay. You're going to get your flight training, which is going to make you be able to get the training that is going to be the training that you need to have in order to fly into space. Basically, when you go to take a flight on an airplane, the flight attendant gives you the rundown before the pilot takes off. That's basically all the training you're going to get, maybe like a couple hours worth of training. And then you stay at the nice luxury resort. It's located on 27 square miles of desert landscape in New Mexico. Spaceport America is Virgin Galactic's human spaceflight headquarters and center of flight operations. It's basically the hub of where you're going to go. You're going to fly into the spaceport, and then you're going to get your training, and then you'll take your flight into space from that location. So we're getting the opportunity to buy this SPCE at a discount right now because of the pepperoni virus going around, and it has caused Virgin Galactic to have to scale back their timeline a little bit. They were expected to have some test flights and that type of stuff going on a little bit earlier this year, but that had to get pushed back due to the Rhinoceros Rex. So the stock didn't react very nicely to that news and pulled back from the $27, $28 area all the way back down to about $15 a share. We're currently trading at $19. We're hovering over this 200-day EMA, and I see this as a all green lights investment for the year 2021. Let's break down my thesis. They're going to the moon, literally. So a Virgin Galactic ticket to space is going to cost you an easy $250,000. And sure, that's going to be out of reach for most people initially, right? Initially, but like anything, that cost is going to come down over time. As they become more efficient in the business model, it's going to become more accessible to your average day American consumer. It's still going to be like an upper middle class, maybe even a little bit wealthy person who's going to be buying this ticket. But over time, it's going to diminish in cost and become more available to your average American or your average person. So we have expected revenue of basically nothing in 2020, $30 million. And then as we move on, 2021, we're gonna hit 210, 398 million in 2022, 590 million in 2023. But this is a long-term play for me, a long-term investment for me, as I see this 10 years from now as being a massive industry. So as of today, there's said to be over 700 tickets that have already been pre-ordered, and I think that number is going to climb. The industry right now is a little bit niche, right? It's only for the extremely wealthy who can drop $250,000 on a ticket. But I think a few years down the road, these tickets may only cost a few $1,000s, and this is literally going to be the Disney World of space. I want to be an investor at ground level. We're trading higher. If you look at a monthly or a weekly chart, sure, this stock has made a huge run from the low $6 area, $7 area, all the way up to $20 a share. But I still think it's early, and we have the opportunity to get in this stock at ground level. So I'm going to be looking to invest in this early 2021 and hold for the next few years. I'm putting a 24-month price target of $40 per share on an SPCE stock. Stock number 2 is going to be ticker symbol TDOC, Teledoc. This is a company that has taken the telehealth market by storm. And why has it taken the telehealth market by storm? Because the telehealth market is getting more attention now, and this is the leader in the sector. The Rhinoceros Rex has put the spotlight on this industry. The telehealth industry is a massively growing sector where you can literally get treated for minor medical conditions from your home. You have the cold, you're sick, you have the flu, you need a medication called in. You call up your doctor, they can do a FaceTime visit from, the doctor could do the visit from their own home, you're in your own home, so there doesn't need to be that contact. The biggest cost for health insurance providers is what? It's not people like me and you, young people who are healthy, who don't go to the doctor often. It's your grandmas, your elderly people who go to the doctor once a week every time there's something wrong. Those are the kind of people that cost the health insurance a lot of money. And health insurance companies are partnering up with telemedicine companies like Teledoc because they know it's going to save them a ton of money in the future. So when your grandma gets sick with a cold and wants to call her doctor or wants to go to the doctor, she doesn't need to go in anymore. And that's going to save these insurances a lot of money. These insurance companies are going to save a ton of money. So that's why I believe the future of this sector is bright. And this TDOC is the leader in the sector. And we always want to be in with the leader of the sector. All right, so let's take a look at some of the numbers here for Teledoc. We have seen a 113% year-over-year growth in the members of Teledoc that have diabetes. Why is that important? Important because people with diabetes are in constant need of medical care. This is showing that the insurance companies, the providers, are sending their diabetic patients to Teledoc, which is showing confidence in not only the sector, but this company in specific. And diabetic people are going to be patients who are in constant need of care. and a reoccurring source of revenue for Teledoc. I know it's weird to think of people with diabetes as a source of revenue, but we're talking about the healthcare industry, and that's just the way it is. Also, we've had a 125% year-over-year revenue growth. If we can continue to see revenue growth of that nature, we're talking about a stock that is greatly undervalued. $2,000 per participant per year gross medical savings in diabetes. 75% year-over-year client growth. A company cannot grow unless you add more clients. It's basically like Facebook when they do an earnings release. The only number you really want to hear is new users added, and that's going to be similar here with Teledoc. We only really care about client growth because that's going to increase revenue over the long run. This sector is absolutely gigantic. The Brontosaurus Rex has kind of shined a light on how inefficiently we were living as a society. Look at Zoom. Business travel was way off the charts. And going to the doctor when you really don't need to. Teledoc and the telehealth sector is expected to see 1 billion plus virtual care visits in 2020. Absolutely massive industry. And this is what it's going to look like. You can literally get your kid to see their doctor from your couch. It is an amazing technology, and I think it's just getting started. And the old Roni, it has shined a light on the sector. 76% of people now interested in virtual care as compared to 11% prior to Ronisaurus showing its face. And this stock has made an absolutely massive move. Before the Ronisaurus, we were trading at about $65 a share. We made a huge run up, and now we're trading at like $205 per share, but we have pulled back off the highs of $250 down to $205. And I think this is a nice buy at these levels, a nice investment for the next few years. We have a market cap of $30 billion. I see this as a $100 billion plus company in the next 2-3 years. I think this sector is growing. When next time you drive around, look at all the doctor's offices as you drive around your neighborhood, your community. I think a lot of those won't be there in 5 years as telemedicine takes over. And I think you're getting the opportunity to invest in this company at ground level. Sure, the chart looks like it's made a crazy run up, but I think 5 years from now, you're going to look at this chart and this stock's going to be trading at $500, $600 a share. So I'm going to be taking a stab and investing in this TDOC. All right, guys, the final stock is going to be one that I talk about all the time on this channel. At least once a week, I talk about this stock. I can't make a growth stock video without talking about the big green monster. That's right, Hyliion, ticker symbol HYLN, the big green monster, the future of the trucking industry. Hyliion is my favorite EV trucking stock right now. Guys have heard me talk about this stock 100 times on the channel. But if you're new to the channel, I'll talk about why I'm in love with Hyliion as a company. First, let's break down the business model. If you're new to Hyliion, it is a trucking company that makes hybrid EV powertrain solutions. So basically, you can put this hybrid powertrain on an existing Class 8 semi-truck. Here we have the description right here. So you don't have to throw away the old diesel trucks. You just outfit it with the Hyliion solution, and it becomes more energy efficient and more cost efficient as well. The reason I like it, and I think this is the future of the trucking industry, is because there's no competition. You have Tesla, you have Nikola, and you have a couple other small boutique style companies. But first of all, the Tesla and the Nikola are more expensive total cost of ownership. Second of all, the trucking industry is absolutely not ready for total EV yet. It will be down the future. Total EV is 100% the future of the trucking industry, but not yet because of the range. The range is not yet there. We can see that the Tesla only has 500-mile range, the Nikola 750. However, the Hyliion powertrain has 1,300 miles of range. And that is important because these truckers depend on being able to drive 7-8 hour stretches without having to stop. And they definitely don't want to stop and have to recharge their truck for 30-45 minutes. That just isn't going to happen. And I relate it to the bridge effect, okay? Over here, you have the future of the trucking industry, maybe 15 years down the road, and that's going to be total EV. Right now you have diesel, and the bridge is going to be Hyliion's hybrid powertrain solution. So the truckers are skeptical of hybrid, and you need to walk them across the bridge to get that to that total EV. That's where Hyliion comes into play. And once they develop these truckers as customers, Hyliion will have already developed the total EV truck, and they'll already have the existing customer base that they developed with their hybrid sales. So I think the future is very bright for this company. It's had a rough late 2020, but I think 2021, 2022, and on is going to be really good for Hyliion. We can take a run at the numbers real quick. So we're not going to see any real revenue until 2023. And then we're going to see $1 billion of revenue expected. I think those numbers are a little bit low, and I think we could see some earnings beats, some revenue beats, and by 2024, I think we see $3 billion in revenue. So right now we have a market cap of just shy of $4 billion, which is flat out too cheap in my opinion. Right now we're trading at $23 per share. We have crashed from the highs of around 60 down to the 20s, hitting lows of 15. I think that $15 level is going to hold, and over the next few years, we break out, and I think by the time, a couple years from now, this is a $100 company. The future of the trucking industry is Hyliion. You have heard it here first. Hyliion is the future of the trucking industry. Remember that a couple years from now, when this stock's $100, that I called it here first. All right, guys, that's going to wrap things up. I hope you guys got something from this video. If you did, like the button for me. It really helps me out and helps YouTube to promote my channel and help the channel grow. Also, if you're new to the channel, consider subscribing. And check out the link in the description for Webull. They're offering the best deal out there right now. 3 free stocks valued up to $1,600. All right, guys, until next time, peace!